Hello guys, it's Max here from Daily Market Movements, and just before I start today's video I just want to make you all aware of a trading signal service that we provide here. If you would like to receive trading signals from either myself or the rest of the team here at Daily Market Movements, and you can do so simply by visiting our website www.dailymarketmovements.com. I'm going to leave the website link below this video in the description, so just scroll down, click on the website link, which will then take you to our website where you'll see that we charge a very small fee of $199 for a year's membership. So in front of me is the crude oil futures chart, and as you can see, we are trading in the green for the 8th day in a row. Great rally here with the crude oil prices. Currently find ourselves trading at $40.34. However, nothing has changed from my point of view. I am still very bearish on crude oil, and I think it's only a matter of time now until we sink back towards that $35 level and potentially even further down towards that $30 level. Do not, if you are a retail trader, do not buy into this momentum rally that we're having here on crude oil. This is what's going to separate the amateurs and the pros in trading. So it seems at the moment, but even in the stock market, retail traders are just buying every single dip, and it's the same thing here in the crude oil. Every single dip that occurs, it's just getting bought up by the retail traders. But don't you worry, because the big boys, the banks and the hedge funds, are going to step in very soon and take profits on this beautiful rally that we've had from minus $44, and that is going to cause oil to drop off significantly. We're coming into contact now with the 200-day EMA, which is the blue line just above the 42 level of the $40 handle, as you can see. So that will offer plenty of resistance. That's currently at around 42.30, and then, as I've mentioned in previous videos, we still have that gap from March that we formed back in March to close, and as you can see, the green line is where the current stock price is, and we are just below it. The gap will be closed at around $41.20, and we're currently at $40.87. We're about 30 cents away from closing that gap, and that's when I expect the bears to jump back into this market and push it down, and a lot of profit to be taken. And then from there, I expect it to trade to at least down towards $35 within this week or the next week. So yeah, I am very bearish on crude oil. Do not buy it. In terms of the RSI as well, we're currently at 64, so we are approaching that overbought territory. That last push up towards 41, potentially $42 is what could cause the RSI to go to the overbought territory, and that's where you also see bears jump back into the market. Using this as an example, as you can see, we were trading back at around $63, and then at the bottom we were trading as low as $48. So that is a huge drop off in crude oil, and that's exactly what I expect to see here. A small grind back down towards 35 to test it, and then potentially even break down lower. We're just trying to find a range here in the crude oil markets. I've mentioned in previous videos that crude oil loves to trade in a range. As you can see, we traded in a range for nearly over a year here, of around $10 to $15, and that's just exactly what crude oil is looking to do at the moment. We're just trying to find a range, and I suspect it's going to be between 40 and 30, or potentially 35 and $49, as this was the gap, which should offer both resistance and support. But long term, I am neutral with crude oil, but short term, I am very